I love it. We're just into the new month and we can look back on the last one, courtesy of Corion. David Bacher of Corion is with us in the studio. He's also the compiler of the Corion Report. David, I love the little video that you put together with your Corion Report. Unfortunately, I haven't worked out yet how we can put it into this video, but I guess at some point in time we will. But you ended up with a song that we have to start singing. Sholoza.
Yeah, an exciting month ahead. Corion Report, we always try to find something that's topical to end on a humorous or pertinent point. And being South Africans, being all passionate about our sports, so we had to end it with the Rugby World Cup and get behind our team.
Well, I was appalled to see on the BizNews Interactive channel this morning, on the premium channel, that somebody reposted something from the Times of London. Not one of them, only one of their commentators, I think there are about 5 or 6 of the so-called pundits, suggest we'll get to the semi-finals. Of course, nobody suggests we're going to win. So I think that, and that what astonishes me is after that last victory at Twickenham over the All Blacks are being tipped perhaps to go all the way, but certainly not South Africa. Anyway, it's nice to be an underdog.
Indeed it is. Okay,
Corion Report on the past month, just as an overview before we go into our little slideshow that you can talk to. Good, bad, or indifferent for investors?
Alec, a tough month, unfortunately, for the local markets. But having said that, we've got to remember we've had two reasonably good months. Our local market was down close to 5%, and the rand fell 6% against the dollar. So, unfortunately, South African fundamentals continue to drift downwards. There was earnings revisions were negative, and our growth is negligible. So our economic growth. So that wasn't a great month. I suppose on the positive side, inflation continues to decline, and I think we're paving the way for rate cuts sometime soon.
Yeah, well, let's get on to that report now, and we can pull it up on the screen and have a look at exactly how things went. The month of August showed us that it was a pretty good year still for global equities, nearly 30% gain. South African equities, half of that. So it talks to what you said earlier.
Correct. It was a tough period. You got to take into account two things when you're looking at this, and these returns are in rands. So you got to take into account your money in a hard currency as well. So SA equities down 4.8%, and then the rand depreciated, as I said earlier, 6%. So relative to international markets, a tough month.
Indeed. But looking at the South African equities themselves, it also tells you that while the past 3 months were good if you happened to have been fortunate enough to be invested in financials, pretty much everywhere else has been really tough going over that period. And in the last month, most, including and particularly resources, came under pressure.
Correct. I found that statistic, the difference between the financials and the resources sector. I mean, that's what, close to 20%, no more, close to 30% return difference for the 3-month period. And even if you look at the 3-year versus the 5-year, and maybe that's even a more of a stark point, that you got financials up 25% per annum over 3 years, while resources is down 7%. So that's an 18% difference over 3 years. But if you take it back 2 years earlier and you look at the 5-year number, resources has significantly outperformed financials, and that's a per annum figure. So, if you had to wave your wand of being a South African investor and you had to wish for one thing, you would probably wish for timing the difference between financials and resources in the South African market, because we're in a market that doesn't have IT, doesn't have a lot of the sectors that you have in international markets. We have a very strong financial sector and a very strong resources sector, and they often perform at different periods of the time. So big difference in returns over small periods of time.
And not just that, the impact on South Africa's tax base, because resources shares improve clearly when profits are higher. And we've seen with resources coming under pressure because commodity prices are lower, that is certainly putting pressure on the fiscus. And, well, it seems as though we might have some serious tax increases coming soon.
Correct. I think that's probably the main reason why the rand depreciated. You saw the budget deficit come in much worse than expected. And corporate taxes is a big part of the revenue collection from the government. So the market is anticipating probably wider deficits than originally thought a couple of months ago because of commodity prices being so weak and the reporting of these companies in the resources sector have been pretty poor. So being a South African resource-centric country, it isn't really a good outlook for the South African fiscus.
David, is there any good news in that? And the reason I ask this is contrarian investors will tell you that the best time to buy something is when it's at its, or it seems to be at its lowest, when it's been going backwards, in other words, underperforming for a period of time. Is there any good news, or am I really clutching at some straws here?
No, I think investing is about cycles. You do have to take a longer term view. We go from one cycle to another. At the end of the day, people do need our commodities. People do need resources. Buildings will be built. So, if you're going to a weak environment, and obviously it's on the back of China, where China's a big consumer of our resource, these things go ebbs and flows. And as a manager of risk, to not be invested in a meaningful sector that is going through a tough time now, while not looking at where the puck's going, I think you're in dangerous territory. So at Corion, we have fortunately been underweight resources, but we're starting to close that gap a bit because things do ebb and flow.
That's an interesting point, that if you have a look at it over the longer term, you might be nibbling away at resources as you are at Corion at this time now. But as far as the rest of South African equities are concerned, we have this argument that continues certainly very closely within the BizNews community because of the R1 million challenge between Magnus Haystack and Piet Viljoen. How are you seeing that at the moment? Because the gap that Piet had, the lead that he had over Magnus, in other words, local beating offshore, is certainly been contracting.
What a wonderful time to have that tournament and that challenge, because it has been so volatile. You can look like a genius for a month or a year, and it flips over the next period. So I think at Corion, we're valuation based. We understand that there are problems in South Africa. We understand that growth is benign, but we also have to look at valuations, and valuations aren't stretched. You are buying many shares at 7, 8 PEs, high dividend yields. So we're not in the camp of South Africa is uninvestable. We're not in that camp at all.
Okay, well, let's move on to the tournament that we have, which is the Fantasy Fund Manager, that we're having a lot of fun in. Interesting to see that in the overall leaderboard, Renee Zitzman is slightly down. Now, she was ahead at the beginning, at last month, the end of July. Now, at the end of August, Brett Rubin has come from pretty much nowhere. Grant Morris has been along there for a while. But it's interesting to see. Was there any particular reason why Brett got in front? And in fact, do you know him at all?
Funny enough, he's actually sitting 3 meters away from me as we speak. Coincidentally, he shares office space in our office. He's a financial advisor, and he runs into our office showing us where he's ranked every day. So we certainly know his positioning pretty much live. But yeah, it was another example of Brett being someone who doesn't buy and sell shares as a job. He actually looks after the financial planning aspect, and he's absolutely loving the game. He's learning about the highs and lows and when to change, and it's been a great experience watching the person who's now ranked number 1 going through the highs. He's throwing a lot of abuse at me, so I'm looking for him to have the hiccup so I can see a different side of his euphoria.
And a shout out as well for Griselda Mazibuko, who won the Women's Month competition. How did she do it?
Yeah, so this is another great story. So I phoned Griselda on Friday, as we do with all our winners, to congratulate her. She's studying at UJ, and part of their investment course is to play this game so they can learn about the market. So there's a very strong educational basis. So when I told her that, because it was the month of August and we were celebrating Women's Month, that she won 5,000 rands, I mean, that was a cherry on the cake. As a student, it was very meaningful, and for most people, a very meaningful amount of money. So not only is she growing in terms of her education and knowledge of the market, but she also had a nice financial windfall as well.
We cannot neglect the winner of the past month being Darren Botha. Did he get anything for his victory?
He also got 5,000 rands. So, and funnily enough, Darren Botha, I used to work with over 20 years ago, also in financial services. So it was nice to phone him and congratulate an old colleague. And we had a few giggles as well and a bit of walk down memory lane.
It's a wonderful competition. Back to the Corion Report and general equity funds in the month of August. Some of them did well, but generally speaking, I guess it was tough to even stay where you were the month before.
Correct. And as I started this podcast, it really is a point, or the most important point is, are you overweight or underweight resources? And resources have really struggled. And if you looked at the 1 year number, you can see all the shares, all the funds that have a resource bias because of the way they invest is underperforming significantly. And I suppose the Islamic Equity Fund, which excludes financials and interest-bearing stocks because of their mandate, which leads into resources of the market, is an example of that.
As far as the high equity group is concerned, surely that would have been even more exaggerated, the resources versus financials spread.
To some degree, but you must remember, when you going into high equity, you have other asset classes as well that become more prominent. So you have bonds and you have property and interest rates. It's not just about one asset class. So you can find pockets to shield yourself against the resources. But as you said, resources or equities is a big part of a retirement fund, a high equity exposure. So you're going to have that same theme, but I would say it a little bit more watered and diluted.
David, on those big funds, Allan Gray balanced 178 billion rand and yet still performing at 16%. That must take some doing. I see the Coronation Balance Plus Fund, more than 100 billion rand there as well, still performing in the past year at 14%. It does appear as though there are some big bets that they have taken, which must have worked out.
Two very good houses. A large part of the savings market are invested with those two houses, so good for the end consumer. I think in the high equity space, what is important to acknowledge is you're allowed to take 45% of your investments offshore now. So in the case of Allan Gray, their partner and sister companies, Orbis, they've had a very good period of late. So it's not just about investing in the South African market. I think those houses that just invest in the South African market at that size will have much bigger problems. So at least they've diluted that problem by about 55% in terms of exposure. But yes, they've performed really well. They had a more challenging time. I was talking about specifically Allan Gray 2 years ago, and you saw a lot of outflows from that house. And on the show, we try to tell investors, don't just disinvest when times are tough. Take a long-term view on an asset manager. And if you stay the course and you believe in the process, you're generally going to come out with a good return. And that's been the case with Allan Gray.
On the global equity, on the international side, interesting to see a very well-named Southern Right Capital Fund. Now, Southern Right is a whale that we see here in Hermanus in Walker Bay. Has it got anything to do with any Hermanus-based asset management company, David?
I don't think so. I know the individual from a while ago, also a small fund, would like to see how that performance shapes up over a longer period and with a lot more assets.
And as we've been referring on numerous times, the FANGs doing very well in the past year, and Ranmore, Sean Pesh, doing well as well, showing up well over 1 year. Inflows and outflows, before we talk more generally, is there anything in the inflow side? I see Cy Jacobs' 361 is still continuing to attract good money into that fund, presumably on performance over the past year.
They are a very capable house, capable manager, good track record. Part of the chasing pack in terms of who's going to be the next big asset managers in the country. So you can see, and very nice to see a lot of smaller, more medium-sized asset managers starting to gain assets.
Is this because investors are becoming maybe more discerning?
I don't think so. I think financial advisors hopefully are starting to recognize that the market is quite small in South Africa, and there is talent out there other than the tried and tested over the last 20 years. I think, and I don't mean to attack the financial industry or the advisors, but part of the sales proposition that they go to their clients is always a lot easier when you're selling the bigger houses and the well-known brand. And that's often a business decision, and I understand that business decision, but it's not necessarily the right investment decision. And I think that's where advisors are starting to get a bit better, actually understanding there is a lot of choice out there. It is part of their role to actually hold the client's hand and actually take them on a journey that's a little bit different for hopefully sound investment fundamentals.
So not necessarily putting all your eggs into the big fund basket, but perhaps bringing in a little bit of spice with some of the boutique funds.
Correct. I think that's the role of financial advisors, is to look for not the houses that have outperformed and grown by factors over the last 20 years, but to think ahead and think about who's going to be the asset managers who are going to win over the next 20 years, the next 10 years, next 5 years. And I think they're starting to well, slowly, play the game with that.
As far as outflows are concerned, there's some big ones. Again, old mutual investors. My goodness, they just don't seem to be going anywhere fast. But their Fairtree, I think there's a story. You've told us the story about Fairtree before, the Fairtree Equity Fund losing quite a lot of funds on...
Yeah, they had a switch from one fund to the other, so it's a bit hard showing them as such a big outflow. Hopefully that rolls out soon, but the rules are the rules, so we don't want to make any special changes to and explanations, but we do go on the show and explain that a bit better. But once again, this is also a function of the bigger houses. If you lose 1% and you're managing a 100 billion rand portfolio, you're going to it's going to be shown in this result. So it's also a function of the size of the asset manager.
Indeed. David, when we look forward to what's going to happen in the month ahead, September, what can you give us some insight into the likely way that you should be positioning your portfolio, and give me some help because I'm slipping back a little bit there in the fantasy fund manager?
I think it probably... two things I'd like to mention. One is, as we mentioned earlier, resources have come off significantly. You have the likes of Amplats, Implats down 20% odd. That's significant of falls. If there's a little bit of good news in China or commodities, that can really turn around quite quickly. So I would say maybe starting to tilt your portfolio towards resources, not necessarily overweight, but that's the one investment advice that are part. And then the other one is just South African bonds. And, bonds are, if you're looking at a 10-year bond, is north of 12%. And, we expect that there might be a little bit of a compression of that spread. But even if there isn't, earning 12% on a reasonably low risk asset provides you a high real return. And if the yield just stays where it is, I think on a risk-adjusted basis, that's not a bad investment.
12% is always good when your inflation rate is half of that. David Bacher with Corion And I'm Alec Hogg from BizNews.com.